Yeah, welcome to the chart. So we need to know that the 1 hour chart is king. Why is the reason for this? The reason for this is because investors, long-term traders, you always want to place your entries, you always want to place your final decision based off on the alignment of technicals with the 1 hour chart. You need to know that regardless of the pattern that you see on the daily, the weekly, or whatsoever time frame you can think of, the 1 hour chart is king. So right now we can see we are currently on the weekly chart, and as you can see on the weekly chart on GJ, on the long term, this is a bullish order flow. We can see that price is making higher highs, lower highs, higher highs, lower highs, and higher highs. So the long-term trend right here is obvious. Following from this, we are going to be looking for trends in the bullish direction, and we can see right here that price broke this structure, this obvious structure. You can see price broke this structure. We'll go to the 4 hour to look at this structure, and price made a higher high here, creating a high here. So we are going to mark out this order block. So now, as a position trader, if you are planning on taking your entries here, you want to see it align. Let us take less than a minute to explain candlestick patterns and candlesticks and candlestick patterns for those who are beginners. You can see price making higher highs, lower highs, and higher highs here with a cluster of green candles. These green candles signify buying pressure, and as you can see price making cluster of white candles and rallying down. These white candles signify selling pressure, and as you can see this candle right here with no color, neither green nor white, an indecision candle. This signifies indecision in the market. So now we have done our technical analysis, and we can see an order block here. Let us learn engulfing patterns. For an engulfing pattern, is very simple. You just need 2 or 3 candles. The first candle has to be selling pressure, and the second candle buying pressure, which means that the market will buy up. However, you need to see these at technical zones, at critical zones, while for selling opportunities you just need to see buying pressure, then selling pressure, then the market comes down. It is that simple. So right here we can see selling pressure, then buying pressure, so we expect price to jump up. So now let us go to the 4 hours and look at the zones we have marked. When exactly did we mark it? On the weekly. On the weekly we marked this zone from 2024, September 2024, and price retested April 20th. So let's go to September 2024 on the 4 hours. So this is this 2024? Okay, this 2023. So this is the zone we marked from September 2024. So just marking this zone, let us go to the weekly and refine it. We are going to mark 50% of this particular block here. So let us mark 50%. So now the particular day that we expect price to retest, we need to go to the 1 hour to look at the reaction of price. That is why the 1 hour chart is king. That is why the 1 hour chart is the most, in my opinion, that's why the 1 hour chart is the most useful time frame. Let us go to the 4 hour to see that particular period in September. So this is the zone we marked after refining it. This is the zone we marked, and we can come lower to the lower, we can come down to the lower time frame to refine further. So refining further, let's just come to the 1 hour. This is an order block here, and this particular order block, you can see when the weekly price retested this zone, you can see we refined it on the 4 hour. So now this is the zone we marked. This is the zone we marked here, and this is the particular day that price retested the zone. Let us zoom out. This is the zone we marked here. Price retested April. So let us go and look at the particular day that price retested. This is the particular day that price retested. This is the day that price came into the zone. So let us go to the 1 hour and look at April 21. So now, once price is coming to this zone, you need to go to that particular day, because you know that the market maker moves what? New day, new target. New what? New day, new target. That is how the market maker moves. It's very strategic, and you can see perfectly on this day when price got into this zone, you can see a bullish candle, and what, you just refine it and take your entry. So you don't take your entry based off on the 4 hours or whatever. You need to wait for everything to align, and you can see price retested this zone and went up. You can even mark the full order block. You can see price came to this zone and went up. So on this particular day, price broke out the Asian range, created a buy pattern, and we already conclude down the long term. On the weekly, the time frame, the order flow is up, and price came here. We wait for the 1 hour, price reacted, giving us a buy pattern, then we take our entries. As we already have confluences, we have confluence on the larger time frame, and what, it aligns with the 1 hour. It is that simple. You can see that perfectly on the weekly time frame. So now let's just go to the daily and look out for another setup and how the 1 hour would have been of importance to us. So right here we can see on the daily, in the recent days, the order flow has been what? It has been to the downside. So concluding that the order flow is to the downside on the daily here, we could have simply just, you can see this is a lower low, lower low, higher low, lower low. So now let's just say this particular month of March, let us zoom in. So zoom in. This particular month of March, you can see a bearish pattern right here. You can see buying pressure, selling pressure, selling pressure, selling pressure. Although this is not a strong pattern, so let's ignore this. It's not a strong pattern. We want to focus on a pattern that has stronger momentum. This is not a strong pattern. Let's just go to the 4 hour. So mind you, any pattern you want to trade, it must be a maximum of 3 candles. That is why you need to be patient to get the strongest pattern that the market can give you. And as you can see, since the order flow is stronger on the weekly, even the order flow on the daily is not that powerful. So now let's just look for trades to the upside, and right here we can see what we can see on the 4 hour. You can see price creating, rallying up, higher high, lower high, higher high, lower high. So before this, let's say we mark this zone as this is the source of this move, and we expect price to retest here. So once we wait and the wick opens, we still need to go back to the 1 hour. Let us do the analysis and mark it out. You see, higher high, lower high, higher high. So before this occurred, we are going to mark out this zone, as this is the source of this impulsive move. This order block here generated this impulsive move. So we know that the institutions, the dominant market participants, they have their orders in this zone. So simply marking it out, we expect price to drive to this zone and give us a reaction and a pattern to the upside. So now we go to the 1 hour, and we can see the day price retested this zone, we'll be expecting a reaction to the upside. So before you take your decision, you should have been expecting a reaction to the upside. However, this pattern occurred late New York, which is the later part of the trading day, and it's not a good pattern to falling. So that's the beauty of the 1 hour. It gives you a perspective into the sessions, how price behaves in each sessions, and we already know that we trade only the London session and early New York. So but still, you can still see the reaction of price on the 1 hour before making any critical decision, because in the market you must know that every decision you make is what it is a critical decision. So right here we can see this order flow to the downside, lower low, higher low, lower low, higher low. So if we are marking this zone, as this zone is the source of this particular move, could have marked here. So marking this order block, we expect price to retest, and let us go to the day that price retest, which is April, the early part of April, and you can see that price retested in the 1 hour, even though price did not give an entry. But you can see the bearish pattern on the 1 hour. Now, we're going to take lots of examples to prove that the 1 hour chart is king and the 1 hour chart is superior to all other charts. So right here we can see this order flow to the downside, a lower low, higher low, lower low. So we can see this impulsive move, and this move is a virgin zone, and as you all know, a zone that has not been retested is the best zone, because it means that no trading has happened in this zone. So we mark out 50% and we'll go to the 1 hour and look out for the reaction of price. So now let's go to the 1 hour, January 27. So you can see immediately price got to this zone on this particular day. Price first gave a bearish pattern here, it failed, then it gave a second pattern which held. So let us mark both. So the 1 hour needs to always confirm what you have seen on the longer, in the bigger picture. So you don't just jump in. You can see this pattern here, and price retested and dropped. So you don't just jump in based off the fact that you have marked a zone in the 4 hours, because if price does not give a reaction there, then it means that that zone is likely going to fail. So you can see this is where we marked. We already marked it here. So we expected price to come this particular day, retest this zone and drop. We are still going to go and check out other pairs as well. So any zone you want to mark, mind you need to always go to the 1 hour for further confirmation. So once we see a virgin zone, we mark. Let's just go to Euro USD to take more examples. So on Euro USD, let's just go to the weekly if we can find any suitable pattern in the weekly chart. Let's go to the daily. So now let's go to the 4 hour. We are going to get patterns that are going to be clearer. So right here we can see this zone here. You can see a lower low, higher low, a lower low, and we see this other block here. So if you find another block that has been retested, to make it a virgin zone is very simple. All you need to do is just refine 50% of the zone, and once you refine 50%, so you can see price made a low this week, so we expect price to come this particular week, January 7. Let's go to the 1 hour, January 7. So you can see January 7, price retested here this day. Price did not give an entry, and the following day price also came to give a bearish pattern which later dropped price down. So you can see immediately price got to this zone, it retested and dropped. On this particular day, price did not give an entry. So you can see the beauty of the 1 hour. So if you didn't see these blocks around the area you have marked in the lower time frame, you ignore. It means that the lower time frame and the higher time frame technicals are not aligning. So that's just the simple signal you can see. Let's go to USD CHF and take examples. So right here you can see this downtrend, a lower low, higher low, a lower low, and you can see this other block here that has just been retested once. So it has just been retested once, although it is not so strong. However, since it's just once, we can still look out for the zone. So let's go April 10th. You can see on this particular day, as price got here, price gave a bearish signal to the downside, and you can see how price respected it. You can see how price respected this and dropped. So trying to align the lower time frame with the higher time frame is very simple, as long as you follow all the principles that are meant to be followed, as long as you follow them to the book. You don't have to break rules. Nothing good comes out of breaking rules. That's why in trading you need to be very strict with following your rules, and you must be patient. So right here, let's AUDSD. Let's check if we have any strong pattern. So you can see, as I've taught you in the break of structure, you can see this structure has been broken, which means that price created it broken with this week. A lot of traders are lazy. You hardly study the charts, yet you want to be successful in trading. That is not going to happen. I'm sorry to burst your bubbles. That is never going to happen. So we expect price to come here, since price made a higher high here. So we expect price to make a lower high here before a higher high. So let's go to the 1 hour and look out for reaction of price in this zone. I'm coming to the 1 hour. Coming to the 1 hour, you can see this engulfing candle. Immediately price got into this zone. So that's just it. Although the engulfing candle didn't give an entry that particular day, but the engulfing candle, it confirms that yes, price is still going to go up. And remember, you always want to take entries after a retest. You always want to be patient and wait for a retest. Let's mark this zone, January 20. You can see this is a clean zone that created this structure. Although you could have marked this block too, although price did not come back to this block. So you could have marked these other blocks, this and this. So you can see higher high, lower high, higher high. So you expect price to come on this particular day, January 21st. So you can see January 21st, price came into this zone, although at the exact low there was no buy pattern. So like this confirms that the signal is not so strong, because at the lowest point of that day we wanted to see a bullish pattern once price came into this zone. It's that simple. So you can see, combining the direction with the 1 hour, you are going to have a clearer view of the market, and you are going to take entries at the best zones. So no need to complicate nothing. Once you see that price does not give you what you want, once you see that at the zones you have marked price did not react the way you want, you are going to know that something is wrong. You are going to know that something is wrong. rather than just marking out a zone on the 4 hour and jumping in. So from all this, I hope we can already conclude that there has to be a synchronization of the technicals on the higher time frame with the lower time frame. So this is a zone I've marked on NZD USD. So at this place, we wait for the reaction of price. If price draws back to this zone, it's that simple. You can see when price created this low, let's just mark this zone and look at the reaction of price. When price got there yesterday, you can see once price got there, it gave a bearish pattern, but the pattern failed. But this is LD. At least you know that it gave a signal aligning with this, even though the pattern failed. So you don't just jump into the market aimlessly without having a concrete confirmation that aligns with the higher and lower time frame. As always, plan your trade your plan, and most importantly, manage your risk and your emotions. And right here we have shown to us the beauty of the 1 hour chart. And you can see right here, price did not give any bearish signal, and you are just going to avoid such trade. If you find this useful, like, share, subscribe, and follow for more.